All right, welcome in everyone to the deep dive. We are tackling something pretty big today. I mean, literally, in a way.
Yeah, I'd say so.
We're talking about that major life transition, having your first child, and specifically I guess you could say the financial side of things.
Financial landscape, it's a huge change.
It is, right. I mean, tons of joy, but also a lot of new responsibility comes with it.
Absolutely. The joy is definitely there, no question about it. And, amidst all the adjustments and figuring things out, the finances are definitely a big piece of the puzzle and one that new parents really want to get a grip on as quickly as possible.
So that's what we're here for today, to make sure you feel like you've got a good foundation in place. We've been looking at Pace to Text.
Hmm.
They outline 15 key financial actions for new parents, which sounds like a lot.
It's a lot to digest.
Yeah, so we're going to pull out the most important insights, trying to make it so you feel, well-informed and ready to tackle things without feeling like, oh my gosh, I'm drowning in information overload.
Absolutely. I mean, you've got this incredible little person who is entirely dependent on you. And as you said, so much joy. But that shifts your financial picture fundamentally.
Yeah, it really does. So where do we even begin?
Well, the very first thing pasted text emphasizes is something, honestly, it might seem straightforward, but it's absolutely crucial. And that is updating your budget.
Your budget, right. Okay.
Because you've transitioned from a certain pattern of expenses. I mean, think about it. Before you had this little one, you had your routines. You
Yeah.
knew what was coming in, what was going out. And now, it's a completely new reality.
New world. Yeah.
Diapers, formula, if you're using that, clothes, they grow out of those things so quickly. And then on top of all of that, you have potential childcare costs, which can be astronomical.
Yeah. It's a whole other category.
It's a whole other thing. Yeah.
So you mentioned those new categories, but it's not just about adding those, right? It's about taking a look at your current spending habits, your current budget, and, making some choices. Maybe that takeout you get every Friday is now once a month, or those, impulse online buys, they've got to take a little bit of a back seat for a bit.
Yeah, it's all about prioritization. Prioritizing these essential new needs and, crucially, also your savings goals. You can't lose sight of those long-term goals even when you're in the thick of it.
Which leads perfectly to the next point, which is building or strengthening your emergency fund. We've talked about this before on the show, but now with a little one relying on you, it becomes even more crucial.
It takes on a whole new level of importance, yeah. Because life happens, right?
Yeah.
And things come up.
Yeah.
You could have those unexpected medical bills. Maybe there's a sudden job change. And these events, they're stressful enough as it is, but with a child in the mix, the stakes are just so much higher. It's not just you're thinking about anymore.
And pasted text actually gives a number. They say aim for 3 to 6 months worth of living expenses to have tucked away like that safety net.
Yeah. Which, understandably, when you see those numbers on paper, it can feel pretty daunting, especially with all these new demands on your budget. But pasted text is very wise in pointing out that the key here is to start small. Even setting aside a little bit each week or each month consistently, that's what's going to build that financial cushion over time.
It's about starting that habit.
Exactly. It's the habit. It's more than hitting some huge number right away.
All right, next up, this one is something nobody enjoys thinking about,
Oh,
but it's absolutely vital for your family's security, securing life insurance.
this is all about ensuring that should the unthinkable happen, that your family is financially stable.
Yeah.
You're providing for your child's future, even if you're not there to do it directly.
Right. Pasted text mentions term life insurance, often being more budget friendly, which I think is really helpful to know because, all of these new expenses coming in at you. But they also bring up IUL policies, which is, what is that? Indexed Universal Life?
Yeah, Indexed Universal Life. These are a little bit more complicated.
Okay.
IUL policies, they offer kind of a dual purpose. You have the life insurance protection, of course, but then they also have this cash value component that has the potential to grow based on the performance of a specific stock market index.
Oh, okay.
So it's something you might consider if you're thinking long term,
Got it.
and you want something that might have that investment link growth potential. But
Yeah.
it's really important to understand that there are fees associated with it, and they can be kind of complex to get your head around. So for many new parents, just having a straightforward term life policy will probably give you that essential coverage you need at a cost that's a little bit more manageable.
Yeah. Makes sense. Keep it simple in the early years.
Yeah.
Okay. Another one that's not necessarily the most fun to think about.
Kind of.
But absolutely necessary. Creating or updating your will.
This is paramount now that you have a child.
Here.
It's the legal document that ensures your wishes are carried out.
Mm-hmm.
And critically, it's where you get to designate a guardian for your child. Should anything happen to both parents?
Yeah.
So tough to think about, but essential piece of planning for your little one's well-being.
Definitely. And pasted text also mentions, outlining how your assets, how your money should be managed and distributed.
Absolutely. You want to make sure that your child is provided for in the way that you envision. And beyond just a will, pasted text suggests that you might also want to consider setting up a trust.
A trust. Now, that sounds to me like that's for people with really complicated finances.
Yeah, they can be more complex, it's true. Trusts really offer you a higher level of control over how and when your assets are distributed to your child. And they can also offer some tax advantages and some long-term financial security benefits. So it's definitely worth exploring, maybe talking to a legal professional,
Yeah.
particularly if you have a more intricate financial situation
Mm.
or very specific wishes for how you want things to be handled for your child in the future.
Okay, that makes sense. Let's shift gears now to something a little bit more forward-looking, I guess.
Yeah, something a little brighter, a little more exciting.
Exciting.
Yes.
Opening a 529 college savings plan.
Yes, this is where you start laying the groundwork for your child's future education. And what's really appealing about 529 plans is the tax advantages. So contributions may be tax deductible at the state level in some cases, and then the earnings grow federally tax-free, as long as the money is used for qualified educational expenses. So over the long term, this tax advantage growth can really amplify your savings.
So that part about it being tax advantage, that's a big deal.
It is a big deal. Yeah, it really can make a significant difference.
Pasted text makes the point that even small, consistent, monthly contributions
Yeah.
can really add up over the years. Might not feel like a big thing at first, but the power of compounding,
Yeah.
right, over time, pretty amazing.
Absolutely.
Yeah.
Starting early gives you this enormous advantage of time for that compounding to really work its magic. And it's, again, less about that initial amount you put in. It's more about establishing that habit, consistently putting something aside so that you're prepared for those future educational needs.
Right. Now, moving to something a little bit more immediate, something you have to do right away, adding your child to your health insurance.
This is crucial.
Yeah.
Typically needs to happen within a certain time frame after the birth. Pasted text points out usually 30 to 60 days. So got to get that paperwork sorted pretty promptly.
Yeah, so new parents got to be on it. Be proactive about that one.
Absolutely.
And they also suggest reviewing your current health insurance coverage in general.
Yeah, your healthcare needs as a family have changed. It's a good idea to look at your deductibles, your copays, and what kind of coverage you have, specifically for pediatric care.
Yeah.
And the mention of an HSA, a health savings account, is important here.
Right, because that offers, what is it, the triple tax advantage?
Triple tax advantage, exactly.
Okay.
So if your health insurance plan is HSA eligible, it's a really powerful tool. Your contributions are tax deductible. The earnings on those contributions grow tax-free. And then withdrawals, when you need them for those qualified medical expenses, those are tax-free as well.
So it's like a win-win-win.
It's a fantastic way to save for those potential healthcare costs that you might have for your family.
Okay, another insurance thing to think about. Reviewing your disability insurance.
This is all about protecting your income stream.
Mm-hmm.
Because, if you were to become unable to work due to illness or injury, disability insurance would provide a portion of your salary, so you're not completely left high and dry. And now that you have a child relying on that income, the importance of having that coverage, both short-term and long-term disability, it's magnified.
Right, it's like another level.
Yeah, it really underscores the weight of the financial responsibility that you now have as a parent.
It really does. Okay, so starting a custodial account. This sounds like a great way to give your child a bit of a financial head start.
It can be. These are typically UTMA or UGMA accounts, designed specifically for this purpose.
Okay.
They allow you to save or invest money on behalf of your child. And then the funds in those accounts, they can be used for a lot of different things down the road, not just education. Think of it as a first car, extracurriculars, maybe even helping out with a wedding someday.
So it's more flexible than the 529 in terms of how it can be used.
Exactly. It gives you that flexibility. But a really important thing for new parents to understand is that these accounts, they transfer directly to your child once they reach a certain age, usually 18 or 21, depending on your state. So while it gives them that head start, you are giving up control of those funds.
Okay, so that's something good to know.
Yeah, it's definitely something to be mindful of as you're doing that long-term planning.
Okay, let's talk about something we touched on earlier in relation to the budget. Paying down high interest debt.
Yes. Always a smart financial move,
Right.
but especially beneficial now as you're navigating those new expenses that come with a growing family. High interest debt, like credit cards, can just be a real drag on your monthly cash flow.
Yeah.
And as Pasted Text very accurately points out, tackling that debt, it just frees up more resources that you can then direct towards those family needs and, of course, your savings goals as well.
Right. It's about giving yourself that breathing room.
Exactly. Every dollar that you're not paying in interest is a dollar that you could be putting towards your child's future or other financial goals.
Okay. Might seem a little bit counterintuitive. We're talking about all this stuff with the new baby, new financial considerations, but Pasted Text makes a point of saying, don't forget to prioritize your own retirement savings.
This is so important. It so often gets pushed to the side.
Right.
When new parents are very understandably so focused on their child's immediate needs. But if you neglect those retirement savings, it can have some, pretty significant long-term consequences for you down the line. And ultimately, your child benefits from your financial security in the long run.
Yeah, it's about securing your own future.
Absolutely.
So you're not inadvertently becoming a financial burden later on.
Right. It's about that long game. So those consistent contributions to your 401k or an IRA, even if it feels like a little bit of a stretch right now, those are vital.
Right. So thinking a little further down the road, beyond those early baby years, you've got the diapers, you've got the formula. Now you're starting to think about those bigger, less frequent expenses that are going to pop up.
Right, because as your family grows, those expenses, they're going to grow as well. Maybe you need a bigger home, a more, family-friendly vehicle. You want to start thinking about vacations, college, all these things.
It adds up.
It really does.
Yeah.
So starting those dedicated savings plans for these larger costs early on, that can make a huge difference. It can make them much more manageable. And it prevents you from having to, rack up more debt down the line.
Right. So it's about anticipating and then, not being caught off guard.
Exactly.
Okay. So how do you make all of this feel less overwhelming? Well, that brings us to automating your finances.
Automation. A lifesaver for busy parents.
Right.
It really can be.
Because it's a lot.
It is. So, setting up those automatic transfers for your various savings goals, investment contributions, even your recurring bill payments.
Makes it so much easier.
It streamlines everything.
Yeah.
It ensures that you're staying consistent, and it just frees up so much mental space because you don't have to be constantly thinking about, oh, did I make that transfer? Did I do that thing? It's all happening in the background.
So you can focus on, the joys of raising your child.
Exactly.
Yeah. And speaking of the future, Pasted Text emphasizes teaching financial responsibility early on.
Yes, as your child grows. This is all about instilling good financial habits from a young age. And you can start introducing, age-appropriate lessons about saving, spending wisely, even the very basics of budgeting.
So are we talking like piggy banks here?
Piggy banks, allowance, even something as simple as encouraging them to save a portion of their birthday money. All of that can lay a really strong foundation for their financial literacy later in life.
Right, setting them up for success.
Exactly. It's an investment in their future well-being that you can start making right now.
All right. Another kind of administrative task to think about, updating your beneficiaries.
Yes, so easy to overlook this one. But after a major life event like having a child, this is so important. Review and update the beneficiaries on all of your accounts, your financial accounts, your retirement plans, your insurance policies, to include your child. You want to make sure that your assets are going to be distributed according to your wishes, that your child is taken care of the way that you envision.
It's about making sure all those safety nets we've talked about, that they actually benefit your child if they ever need to tap into them.
Exactly.
All right, last but not least, Pasted Text suggests consulting a financial planner.
Which, at this stage of the game, might be the best thing you can do.
Yeah.
A financial planner can provide that really personalized guidance that's tailored to your situation. Help you align your goals with your family dynamics now, manage risk, and just create a comprehensive plan to secure your family's future. It can feel so overwhelming trying to do it all yourself. So having that professional in your corner can provide some real peace of mind.
So true. Okay, we have covered a lot today. We've talked about updating your budget, emergency funds, insurance, wills, savings plans. I mean, I feel like we've just scratched the surface, but in a good way.
I think so too.
Yeah.
And really, the takeaway for all the new parents out there is that taking these proactive steps after the birth of your first child, it's about more than just managing money. It's about providing that security and stability and a foundation for your child's future and for your whole family, really.
And as Pasted Text so eloquently puts it, the sooner you take action, the better.
Absolutely. It's not about being perfect right out of the gate. It's about starting the process,
Yeah.
making consistent progress towards these really important goals.
So as you're listening to this, thinking about all this, consider which one of these steps resonates with you right now? Like what feels most urgent? What's one thing you could do this week realistically to start moving in that direction?
That's a great question to ask yourself.
Yeah, because it all starts with that first step.
Okay.
All right, that's it for this deep dive. Thank you so much for joining us. We'll see you next time.